Good morning, everyone. Good afternoon or good evening, wherever you are. My name is Tim Stout, and it is November 10, Friday, November 10. And I'm here to take you through some of the price action today. Very warm welcome to everybody. If you're in the Discord and you have any questions, then feel free to tag my name in there and then ask them in there. If you are not and you are in the webinar, I will see if I can open the questions box in here. I found out the other day how to do it. Maybe I can do that again. I'll go through some of the price action. Today is Friday, so the weekly chart will be important. It's also early November, so the monthly chart might be important. And then, of course, I'll go through some of the price action from yesterday and in general the whole week to see if we can work out what the premise will be going into the day, and then get you all started. So let me see. I'm still looking at this questions box thingy. Settings. Dashboard. No. Well, I'll just leave it there. So we got the Discord to tag my name. So let's get the show on the road. I'm missing my info box. There it is. So yesterday, I'll go through that later. I just want to start with the weekly chart. Well, the monthly chart maybe. So the monthly chart, we had three big bear bars. One with a big tail, but the second one was a climax. The third one was a climax with a little tail. We broke below May, June, and July. And the current run up is, in my view, a run to get them out to break even. So if you sold, or if you bought the July close at currently in this contract, it's 46.8375. You probably want to buy more at the May low, maybe at the June low, but probably at the May low, and trying to get break even. If it sells on you 400 points, you're not going to get a new high or a new all-time high. So you're going to try and get out break even. Now, the low 44.55, I can put that a little bit down. So you can see that the high of this week, where we got to 44.11, if I put it precise, I can put it precise for you guys. So the close here was 46.6375, 46.6375. A good presenter would practice stuff before. 55.25. Right. So you can see that the midpoint between that low, the start of the leg, that was not the start of the leg because we dipped below April. May was the start of the leg. So May, June, July was one leg. If you bought the close of July, you buy more at the start of that leg, 55.25. Your break-even point is 44.0950. Okay. What was the high of this week? 44.13, and it sold off. And so it tells me that there is a chance that we might only go a little bit higher or not even, but that this is an important point, an important price point, the midpoint of that leg, that anybody who bought on the monthly chart is now break even if they bought more and if they bought the July close. And that is what frequently happens. I believe that we're going to go below the May low again, probably in what will form as a second leg down. Now, if the second leg down comes from the midpoint, then expect a B, C, D type of move to around 3,800. But if the start of the leg down is all the way at the top, then it's probably more of a double top, and then we would sell off only to about the May low, but then we could only sell back to maybe the October close instead. So for me, it's going to be important to see what happens above November. December might go a little bit higher as like a year-end rally, and then we'll sell off to about February into the May low. That is currently what I'm expecting. But this price, I think, was important. It was a target on a lot of charts, and it's exactly at the break-even point of the May low and the July high. So it could be that this is all the bulls are actually going to get, and that we're going to continue down. It's also a high one on the monthly chart if we get above October. there will definitely be more, well, definitely, nothing is definite. There will be probably more bears above October than bulls. It's a high one in a trading range on the monthly chart. There's a higher chance of finding bears there than actually finding bulls there. Right, then on the weekly chart, we had those three legs down. It's a wedge at the moment. We had a very strong reversal up. If you see a wedge like this, the first target that the bulls will have is to break the lower high. It's effectively still a bear trend, lower lows, lower highs all the way through. And the only way to break the sequence of lower lows and lower highs is to go one tick above the lower high. And so 44.2350 is the target for the bulls. They'll probably get that, but they're also a little bit exhausted on the weekly chart, so they might have to pull back and then hit it, or they're just going to continue and hit it directly. But the same thing applies on the weekly chart as to the monthly chart. There are probably going to be bears around 4,500. We might actually get to the inside bar of the September low 44.94. So we might go all the way up here, maybe leg two, again, leg one, pullback, leg two, or a little higher pullback. 45.70 might be an area, but then we'll start to sell off again into the May low, into 41.50, 41.37. That's at least how I look at the chart. And then we come to the daily chart. So we had a very strong sequence of bull bars that almost reversed the bear trend, but it didn't. So it reversed this leg, but it hasn't reversed that leg yet. And that's pretty typical, because what bulls were aiming for is a measured move right around here where the previous bull leg finished. That's where you're going to find some resistance. It's going to take some, no, you're going to get some profit taking in here, but there's going to be most likely a second leg. Will the second leg start here? Will it start here? Will it already have started? We don't know yet, but I think we're going to see a little hesitation here, but ultimately going above that, above these lower highs on what are also the lower highs on the weekly chart. This was very climactic, right? Where can on the chart did you see 1, 2, 3, 4, 5, 6, 7, 8 bull bars in a row? It's almost difficult to find, and so when you do find 8 big bull bars in a row, you know that it's a buy climax, but it's also going to end soon, right? At the third, at the fourth, at the fifth bear bar, you know it's now an inside bar. You see a outside bar. You see a small doji. Well, that was definitely the sign for the daily bulls to get out of longs, and then bears come in at the previous close and they just sell the whole thing down. And we're now below the lows of that last leg, so we could actually fall maybe back to the moving average, or we could get now the start of the second leg up. That was a little bit the higher time frames. If you look at today on the RTH chart, I have that somewhere, RTH chart. So if you look at today on the RTH chart, it's actually a low 2. So if you think about this, we dipped below it and then we went above it. And so it triggers today, it triggers actually a low 2 if you go below yesterday's low. And it would be a removal of this whole sell-off if we actually go above yesterday's high. What are the chances, if you look at this, the U-shape, are the chances that we're going to get a strong bull day today? Probably not, right? Because you can see where we are. We're at the tops, we're at the highs, we're at hesitation, we're at profit taking. And so it's either going to be more sideways, profit taking type of days. Profit taking type of days are where bulls take profits at new highs and bears fill in. But bears know that there's not going to be a big bear trend. And so bears take quick profits, bulls take profits at new highs. And so you end up with a lot of trading range price action on days where you're in an area of profit taking. Were the bears selling somewhere in here? No, this is way too strong of a breakout to start selling in here. So they start scalping because we're at an area of resistance. but they are not scaling into 200-point shorts, right? So that's what you see for 3 days long. We had a tight trading range. You could call it a wedge top, but that was profit taking from bulls more than bears scaling in. But so that is where we are. We are at the moment trading around 43.80. So this is some overnight price action. We had our sell-off yesterday. We had a wedge pullback to the moving average, a sell-off overnight, and we just set 2 big bull bars on the hourly chart. Possible measure move up to 43.90. If we do that exactly, so 56 to 73.75 is 43.9150 as a breakout target. It's a trading range, so breakouts might fail, but if we get a successful one, and this is looking very promising, then 43.9150 is a first target. That's easy to, of course, reach on the RTH hours versus on the Globex hours, but it's a nice first target to look at. All right, then let's take a look at yesterday. Yesterday was really interesting. We had a small pullback bull trend up to a new high, and small pullback bull trends are really strong. Like they basically go up relentlessly, but they are very often also just a lag in what will become a trading range. So often after a extended small pullback bull trend, sometimes you get a sell-off that just reverses at least 50% of that whole small pullback bull trend. And so when you see 2 big bear bars, well, first of all, you have to think it's all in short, but it's all in short after a gap up. So it's probably more a trading range than a bear trend, but you're still high in the trading range because the trading range started at yesterday's, Wednesday's bar 32. So you're looking to see at least a 50% pullback that was around bar 8. I was looking at the ETH 50-minute chart, and when I rewind it sort of back to where it all happened, I looked at this little wedge before the market opened, and I looked at this bar breaking out below that wedge. And so that makes me wonder, are we going to get a measured move down the size of that wedge? So I had 92.50 as my measured move target. So let's transfer that from here. 92.50 as my measured move target. Stop above 1, and then I can calculate where the 1 to 2 entry is, because if I sell 44.04 and I put my stop above 1, and I show you guys what the risk reward looks like, then that goes exactly to 92.50. So again, I take a different approach here where I have an idea of where we're going. I have an idea of where the stop is. So I re-engineer my entry point. When I see bar 6, I'm just placing a limit order here, 44.04 to 9.75. Now, why do I have confidence in that if it's going up like this? I basically sold limit order when it was looking like this chart. Well, I was helped here by the fact that the first 15-minute bar, so the first 3 bars, were big bear bar. Okay? So even if it goes up here, I'm confident it's still going to come back to the 3 close, because that is the close of the big bear bar. And so I'm willing to risk, 5.5 points to make 11. And so when I see bar 8, I knew that we're not going to stay close to the 3 close. I knew that we're actually going to that measured move. And then I see 2 legs down, bulls trying to get continuation and a further measured move. But then when I see bar 15, bar 15, so that close here, I know that taking the bar 12 as the exit was probably the right thing to do. Right? Mind you, bar 3, bar 6, bar 9, bar 12, bar 15, 18, and so forth are closes on the 15-minute chart as well. So when on bar 15, the 50-minute chart printed a reasonably big bull bar, that's when I thought that they're probably on the previous bear bar, so bar 12, they would want to get out. Alternatively, you can also say if you sell the 13 close and you sell the 11 high, then somewhere in the midpoint you want to get out, and that is what bar 16 did. So the bar 16 is the midpoint between the 13 close and the 11 high. Exit for the bears, bulls take over, but they don't manage to actually make a new high, so they never got above 7, but they got back to their 6 close. So if you bought the 6 close, you got back to the 6 close. You also got a measured move, so you can see the 10 high. So we strongly break above the 10 high with 20 being the follow through. So it makes you expect that we should at least get a measured move to that 44.0325. You also had 2 strong bull bars on the 15-minute chart. So that stopped at bar 18. Bar 18. And so you would expect a measured move the size of that first 2 bull bars, and that goes to the same target. So you have a measured move target, you have a 1 hour target, and you have the 6 close all at this price. Makes me believe somewhere in here, actually at the 18 close, that we were gonna go in that direction. Then bulls try to get a second leg up. So you had first leg, pullback, and then hope maybe a channel, maybe it's spike and channel, and you see it like, we're trying to get higher, but then bar 30, 31, 32, you can just feel the disappointment creeping in when we're going sideways for 15 minutes. And if you don't give up on 30, you don't give up on 31, you don't give up on 32, I think most of the bulls here gave up on 32, and we dipped below the 27 low, so we dipped below these lows. Well, now we're making lower lows and lower highs. So this pullback doesn't come back there. And then Powell washes like a bucket of water over the markets with his remarks. And then you see bar 43 falling. First thing I do is, I wasn't around, so I haven't traded this live. But first thing I would do is, where is this breakout? It's a breakout, but where is it breaking out from? Well, it's not breaking out from the low of the day because it's not closing below the low of the day. Although the follow through does. So it could be indeed a breakout below the low of the day and then this whole range. I more saw it as a breakout below 17. And so it makes me wonder, are we going to get a measured move down from the high of that range to 43.72? And you can do the same thing. I would not want to see this reverse to above 43, right? So that for me is a lower high where it's safe to put my stop. If we go above there, we're not pulling short. So if I want to see us go to 43.72 and I want my stop to be above 43, then where is my entry point for the 2 to 1? Well, you give it 1 tick more, your entry point is exactly at the 45 high. So I would sell the 45 close, stop above 43, and then see it run to 43.71, 43.72, somewhere in this area. And by then, because we're going there, the breakout is actually confirmed on the whole daily range, because now you have a stronger breakout on the daily range. So you're starting to wonder, are we going to get a measured move down on the daily range? And that's ultimately where we went to. And then there, of course, you're going to get some reaction, pullbacks. We're breaking this lower high. We're ending up, bulls are trying to make sure that the day doesn't close on its low because it increases the chances of follow-through selling. And they did a very average job, I would say. The low was actually 62. We closed 65. So bulls would have been much happier if the close would be around 43.80. 43.65 is disappointing. And so we're expecting some follow-through selling on the day. We're currently trading at around 43.79 handle, so that's here, just below the 60-minute moving average. And so we're quite up as soon as we open. After a big sell-off, I don't expect much room to the upside. If we open around here, we're probably going to see this as a pullback from the short and then start to close some gaps here to the downside. At least that is what I'm expecting. But of course, I throw my premise out the window at the earliest sign of something not being right. And already pre-market that looks like a very strong trend. We can see maybe two legs. So if this is one leg, this is another leg, we could get a third leg, and that could bring us onto 43.90 area. Maybe we come all the way up here and take this high out, but I don't expect a big bull trend today. So even if we go up, we're probably going to set a early high of the day and then come down. We could go sideways, but chances are that we're not going to go to above yesterday's high all the way. But let's see. It's Friday. Stranger stuff has happened. And so those were the items that I wanted to go through. Best sale of the day was probably here. You could sell this, but you need to be aware of where we are in terms of the fact that the measured move had already gone ahead. If you put your stop above 7, then selling here is a great idea because you have the inside bar 16. You're going to think that we're going to have to close the gap through there. And so a risk reward here on a filled second leg, or even here, is fantastic to at least the 16 high. Like that was an inside bar. There have been bears selling above it. They'll sell higher and they'll take profit on their later entries, breaking even on the first entry. And look at where you could put the stop, like it's only 2 points above or something. So great risk reward there. I don't know how fast this happens. Oh, are we back? Yeah, I think I lost the connection there for a second. I don't know how fast this happens, but selling at the close would probably be tricky. If you sold the close, you put your stop there, you still got 1 time risk reward, not 2. But I think it's hard to do emotionally, especially because we didn't break below the low of the day on the close. So probably tough to sell here. But once you see a pullback, 50% pullback from the whole sell-off, this is where you look to sell. It's a great area for short, close to the moving average, low 1, 48, low 2, 50. So this is probably the second best trade of the day to get to measured moves below. All right, so that was all that I wanted to go through pre-market. So I'm just going to give it a moment and stuff myself with some extra medicine because you can clearly hear that I've catched a cold. And if you're catching a cold in Barcelona, you know it's either going to be November or December. So I'm just going to zip on a fresh coffee and then be right back with you guys. All right, I found the questions box. So if that is... All right, are we still here? Yeah. The connection is unstable, I'm not sure. So I found the questions box. That should be working now as well. Let's see. All right, final check to see where we are on the 50-minute chart. So still strong reversal up from a new low of the day. We have our target 9150, so measured move on the Globex range to 9150. Let's put that on the chart so that we have it as soon as the market opens. I'm going to delete the rest, so there we go. And then also got to get the high and the low end, 43.83 on Globex. There we go. And 43.50 for 25. So I'll put some description in here. I like to have the lines in there when the market opens, but I am always looking to remove lines as quick as I can because everything on the chart disturbs me, and so I like my charts to be as clean as possible. The thing is, if you put a line on your chart, it feels like a ceiling, okay? It feels like price cannot go above it or something. Like if price goes on the top of your screen and you don't have software where you can actually drag it down, it feels like price is gonna sort of stay there because there's no way that it can move outside of your screen. So I always like, first of all, I always like software where you can make space, and then I like software where you can just freely move around. Okay. So we crossed the Globex high on the open, or we're about to close it at the open. And bulls are on a win for profit here, okay, in the context of a trading range. So we're high at the trading range, and bulls that bought yesterday at the close, 78, 81, they're at a big profit. They know that we're in a trading range. They know that today is probably not going to be a bull trend. So if the market opens here, what do? They take profit. Okay, so you can see that we're selling off quickly. We had one measured move. Maybe we have a stack of measured move here to 74.75. That will place us very close to the other measured move from the Globex. So there's now two measured moves around yesterday's 45 close. But we probably have to come lower to find bulls willing to buy to go to that level, because the stop is probably still around 70, around the 78 low from yesterday. And so you need to get to 74.50, you need to get to 74.75 area to find bulls willing to buy there for what is then one-to-one risk reward. So if this opens here, that is a good area for bulls to take profit. Now, what do the bulls have? They have the overnight price action. They have two very strong legs to the upside. And you expect that if this leg is about the same size as this leg, and it is, we're going to get a third leg that is smaller, larger, or the same size. So if I put that to around 74, where I think we'll find those bulls, that projects to where? That projects to about 43.90. So now we have a third reason why, if we find a long around here, so around this area, we find a good long setup, we can hold it to 43.90. If that long setup never develops, then we don't take it and we don't ride it. But it's good to have some sort of a premise to understand what's going on. And now I have three reasons to think that we're going to visit the 45 close from yesterday after a pullback. It might be a two-legged pullback, it might be a wedge pullback, but the fact is that we have a huge gap up, and so finding a long setup is probably more likely until we start to see 2-3 bear bars. Looking for a pullback long to around this area makes more sense at this moment than anything else. About 90% of days cross either Globex high or Globex low. If the range is very small, you have an increased chance that we're going to go through both. So then we're touching Globex high and Globex low. Globex as identified as the overnight price action. Globex is actually the name of the exchange, and so it has become slang for overnight. Another term to use is extended trading hours, right? So overnight price action, ETH, and the intraday price action, so bars 1 to 81, are RTH, regular trading hours. So ETH is probably more the name to use also for other exchanges. So DAX overnight cannot be Globex because it doesn't trade on Globex, but the German DAX overnight is probably just ETH. And so ETH is the better name to use. But Globex has been such a widely adopted terminology that that is used by many people as well. All right, so the question is, will we find bulls buying yesterday's 61 high for a breakout test, or will we go even lower? See what we got. So 74.75 would be very nice. I'm not going to short any of this. We have a big gap up. What would be a 50% pullback from the close? If we take that, that would be 74.75. So wouldn't it be fantastic if we hit 74.75 and then raise up, and then we can get on the bus somewhere there? That would be very nice. Okay, gap up, big bear bar, closing on its low, nothing to buy here, but is there something to sell here? I think so close to a 50% pullback from a big gap up, there's nothing to sell here. In addition, the ETH right before the open went strongly up, so nothing to sell than this low. But we'll have to see if the bears can get more momentum. A 1R, so stop above the bar, you sell the close of the bar, 43.77. If you want risk reward of 1 to 1, your exit price would be 43.6975. Okay? Your additional 2R target would be 43.6550. That would be too much, so your second target would probably be yesterday's close there, or the bar 80 high, which was a small inside bar. And so that would be your minimum targets. And so I put the line there just to see if we can get there. But I also know that we were testing at this moment the 61 high. So if we now sort of get either a strong high 1 or a nice high 2, then I would look to see if that projects to 43.90 area. The bull case would be significantly worsened if bear selling bar 1 can get to 43.6975, right? Because then bears are actually making money. What you want is that bears are getting hopeful that we're getting close to their targets, that we then trap them, and that we reverse up. Bulls buying, bears buying because they're panicking out. Double buying pressure takes us to 43.90. If you look at yesterday's 50-minute chart, you had one leg, the big bear bar with the long tail. You had a second leg, so these 4 bear bars. You had a pullback and then a third leg. So you had 3 legs in there that was basically a wedge. And then as soon as we break that high, bulls will try for a measured move up. There was a small inside bar here, so the inside bar with the low at 43.8350. That's exactly what we tested at the high of bar 1, so 43.8350. That was that low, so the low of yesterday's bar 49. It's exactly tested, and so we got there. It was a target for the bulls, and they took profit there. Okay, so far our premise is holding nicely. We don't get 69.75. We're starting to reverse up. We tested the high of 61. Can the bulls get a strong bull setup, and can we go to 43.90? Or is it weak? Do we actually need to wait for a second entry? 50% pullback, a little bit more than 50% pullback. So what are you thinking if you sold the close of 1? You're like, oh, I sold the close of 1 after a big gap up. I want to get out break even. And so the 43.77 is what bulls will try to not get back to, because bears, the first couple of bears are trying to get out break even on 43.77. Now even more, like they get spooked out. And so bulls will do what they can to not get us back to the 43.77. We're smoking out the bears more and more every tick that we go up. So if they get a chance to get out break even, it weakens the bulls, because what they want is they want to buy and they want bears to buy, right? If we're all buying together, we're going to race up. But this is looking good. It's looking good for bulls. You should be able to get a 1R is 43.89. You should be able to get close to the 43.90. But it's a high 1 in a trading range, so expect some bears to sell there as well. I'm not buying this yet. I want to see what happens. If we break above 1, I'd be happier to buy. I would like to see a 15-minute bull bar as well. That bar 1 was a little too strong, closing on its low. That it could be that 2 is not yet the low. We could get a small second leg, but I'm looking to see a pullback to around this area and then continuation up. I'm hoping to see that we get to 43.7725, one tick above the close of one, and then reverse up. That would be super nice because then the bears did not get a chance to get out break even, and bulls got the lowest price they could get for continuation long to 43.99. Looking here, measured move on this range, 43.56, 43.7150, 43.87 target. Yeah, that looks logical. 43.87 we should reach. If we now break above one, that is better. Trapping all bears here. Bears didn't get a 1R. Putting a nice bull bar together on the 50-minute chart. If we close above the one open, you can see here on the left top what type of bull bar that is going to become. But we're selling, or you're buying against this strong leg down, right? And so it's not going to be a bull trend. It's going to be a trading range. You're in a trading range, and you're sort of in the middle of a trading range. So you got to be careful about what you're doing. Certainly not buying a high one, but if we get another pullback, then it would be looking a lot more likely. We have a double bottom on the 50-minute chart, so we had 72.25 here, 72.25 here. That strengthens the case of the bulls, and so this bull bar, or this bar, this 50-minute bar should get a close above the one open, and then maybe a measured move up or 1R. Now also here you can see we went below the previous bull bar, so that was 79.25. Let me put that on the chart. 79.25 is here. So we went below 79.25 low once, and that means that probably in the next 50-minute bar we're going below 79.25 again. So we're trying to break up below it once. We're trying to break up below it twice. I don't think so. We already had a measured move. We already had a measured move. Then we're not going to do that. Because what bears will be trying is to get below a bull bar for a breakout and a measured move down. If that doesn't work, they'll sell more at the close of that bear bar and then get out one tick below that bull bar. But since they had a measured move, they will not try to do that anymore. Okay, the 50-minute close is clearly trying to become a bull bar. You can see that we're fighting with 50 seconds to go. We're fighting to become a bull bar. So when is it a bull bar? Well, it's a bull bar if it, of course, closes above the one open. And so it needs to close higher than 43, what is it, 82.75? Why is this off again? And it's working. All right. Next target, 43.90, 45 close, and 43.95. And wherever this bull bar closes, I will draw a 1R. There we go, 43.99. It's a trading range, and so some of these targets are going to fail. Most breakouts fail, and most breakouts can fail by going a long way in the direction, but then just about not make a measured move. So I'm fairly happy with the 45 close, 43.90 area, but I have that 43.99 in there. I'm not sure about that, right? So I like this area, 43.90. I don't like that area, 43.99. If by the close of 3, I think you can, but your stop should be either your stop should be below 2 or you should scale in below 2. It's probably going to be too high to buy if you only have a single position. Bulls would like to buy a 50%, so 78.75. They would like to buy this 43.79 or the gap to the 2 high. So that would be 150. They don't like to buy so high in a trading range. So if you buy the 3 close, you need to buy lower, and then when we get back to the 3 close, if it's more than a 50% pullback, you probably want to buy the 50% pullback and then get out when we come back to the 3 close. Right? You're scalping in that case. Testing the high of 1, so breakout test, and then trying to get resumption. 43.90 area still the target for the bulls. Bulls are getting hopeful. But where is the continuation above part 3? It's looking like we're going to get a bigger pullback, right? You can see the disappointments for the bulls we're testing. We're not immediately reversing back up. I liked the reversal from the 2 low in the area where I thought we would test. I like the denial of the bears getting a 1R. That typically leads to a measured move up or an attempt to get a measured move up. An attempt to measured move up would be 43.95. So if that would fail, we're probably going to go to 43.91.75. I think that is still our target. But if you think about it, you want to put your stop below 2, right? You want to reach that target. So can you buy at 43.85? Well, your risk reward is going to be less than 1. I will never try to take a trade that has a risk reward that is less than 1. And so at the moment, at this level here, I can't buy because I can only buy at the 2 high to get to 91.50, or I need to increase my target. If I want to buy here, I want to get more confidence that we'll go to 43.99. And the alternative is, of course, that we get this as a pullback, a new high, and then we have a new higher low, so that I can use the new higher low to find the trades. But at the moment, I think it's going to come a little bit more down instead of directly up. 43.90.50 would be a breakout target above 4. I like this double bottom, and I like the fact that we still need to go a little higher. But at the moment, we could still just only take 87.50 and not go to the 43.90 area. This is setting up a low 2, in fact, right? So low 1, pullback low 2. So it's still too early to say what we're going to do. I think the bulls will buy a 50% pullback around 79. That would be a good scalp. We're now at the 2 high, so that is where I said it would be interesting to buy here for a 1-to-1. Now at the 2 high, so that is where I said it would be interesting to buy here for a 1-to-1. So if the bulls do that and we reverse up strongly from here, then 43.90 is a lot more likely. We got the 50% pullback. Did we? No, not yet. It's bullish, but at the same time, you need to be aware of the context. Like, we're so in the middle of this range that the longer this takes, the more 50-50 it's going to be. So if you don't have if you have the luxury of multiple contracts, you can start scaling in at here at the 2 high and at this line. If we hit this line, you probably want to get out at the 3 close. If we never hit this line, but only this, we're probably going to go to 43.90. 3 close. If we never hit this line, but only this, we're probably going to go to 43.90. If you don't have that luxury, it pays out to wait a little longer. There's going to be clarity anyway. I like this, so I like it that they bought the 2 high and that we're reversing up. The bears that sold the 1 close sold more at the 1 high, and they got out break even. So you sell the close 43.77 and you sell more at the high 43.84. 80.50 was your break-even point. That's where they got out. So that's why I'm saying it's not as strong as it could, because you want to trap bears and then raise them up so that they have to get out of their shorts in a panic. And that's not what happens. The bears confidently sold more at the one high. They got out break even. The bulls are still in their trade. At a minimum, they would want to see 43.89.25 to the 43.99 area, at least to the 43. What is this? 91 area. And so bulls bought where bears bought, right? Double buying pressure in that 5 low. Still chances of going higher. Still good for the bulls. Look at the 15-minute on the Globex. It retested the highs of that range. So it reconfirms that the measured move is either going to be 90.75 or 87.50, but at least higher than this. We'll have a double bottom bull setup with leg 1, leg 2, and leg 3 still to complete. I would say at least 87.50. I would say more likely 90.75, which comes to this high. So 90.75 is currently still the target that I want to get to. 43.90.75. Let me put it here. Trading ranges are famous for missing a measured move to the tick or to 2 ticks. So you can use 43.90.75, but you can also look at the 45 close from yesterday and say, we're probably going to come back to that price as well. So that was 43.91. That's done. This is not correct. Wait. There you go. So 43.90.75 is actually looking good. Can we get a 50% pullback on the bar 3? 78.75. I think the bulls would like to buy there. We don't have a good buy setup yet. And we just triggered the low 2 and we're selling a little bit. So trading range stuff. Looks like the bears cannot even get a 50% pullback from the 15-minute bar. So the bulls are strong. They don't even have to scale in at this point. But it's 3 bear bars with big tails. And there might be some news event now. So now we have that 50% pullback. So bulls are scalping this out now. Stop below 2, trying to get back to the 3 close. And will they get out of longs at the 3 close? I would, if I was in that trade. But it's a trading range, so nobody's selling this low. We're going to go back to the 3 close and then probably to the 43.90.75 still. But it's weaker now because the sell-off was much larger than 50%. Okay, so if I see a big bull bar here on the 15-minute chart, I would want to buy around the midpoint or lower. You can also buy for a 2-to-1, because the entry here, 76.50, was exactly 2-to-1 risk reward. Okay, so it's a trading range. You want to buy in the low third, so you buy with a limit or the 76.50. Your exit is going to be 85.50. Your stop is going to be below 2. If you're right half the time, you're a profitable trader. And then, of course, you scale for risk. If it goes below 2, that is where your stop is. Other bear bulls will take a different approach. They will buy the 3 close and they will buy the 2 low and try to get out break even in that way. So they're still happy with where they are. They would just buy the 2 low, trying to get out at what will then become 79. So those bulls are still, well, they're not happy, but they're still in their original position and they haven't scaled in. The scalpers have bought the 70, what was it? They bought the 79, and they're trying to get back to the 3 close. If this closes lower, they will buy that and then get out at their original entry of 79. Not believing that we're going to go back to the 3 close. What will be at the 2 low? Will there be sellers taking this to yesterday's low for a measured move down, or will there be bulls scaling in? We don't know yet. A measured move is to yesterday's low. So we want to see the pullback. The fact is that if we go below 2, then we're also going below a double bottom, and that would increase chances for the bears that we're going to go to yesterday's low. Right now, it's still more likely that we'll go back to the 3 close, or at least 79. But if we go and break below 2, yesterday's low comes into the picture. That's why you said, no, you can't buy a high 1 here. It's a trading range. A high 1 in a trading range is not a good buy. A low 1 in a trading range is also not a good sell. So after a gap up, I said don't sell below 1. I didn't sell below 4. I think it looked way too bullish at that point. It still looks bullish because the bulls are buying the lower third. There's no breakout yet. And so it's a good price for bulls to buy with their stop below 2. I think we just have to wait a little bit more. So if you buy the 79, 50% pullback, would you still hold for the 3 close? No. So you want to get out at the 79 where you got in. So if this closes above 2 and it reverses back to their entry price, they're going to exit. Now bears are not going to get below 2 on this bar, so it weakens their case. And so the next bar could just go up to 79, could even go up to the 3 close, because a lot of bulls will be buying the bar 7 close. Bears are hoping that this is leg 1, that this will be leg 2, and that we're going to 43.40. But with the gap up and the 2 strong bull bars 2 and 3, that is less likely. It's just too high to buy here. It's too low to sell here. So it's better to still wait a little more. If we now would get a small bull bar, that would be a high 2. But everybody who's been buying the way up 2, 3 will want to get out. So they buy the 7 close to get out break even. They buy the 7 close because they're hoping that we can come back to the 3 close. But as a bear, I would not be holding short. I would only be holding short if 7 actually went to the low of 2. This is better for the bulls than for the bears. So I said, if you bought 79, were you happy with the 7 close? Probably not. So you bought more and you exit at 79. So your first entry, you were hoping that it would just be 50% pullback back to the 3 close. You didn't get that, and you were scalping, so you buy more at the 7, and now you exit. And so those 50% pullback buyers, they have, what is it? They have 3 points. Okay. The 2-to-1 pullback buyers, the bulls that buy for 2-to-1, they're still in their trade. They're not feeling all too bad because they have been buying 67.50, almost the close of 7, trying to get back to the 3 close, and they're feeling hopeful that we can get there, which is not all that unreasonable. I think as long as we are staying above 2, we should be able to get back to the 3 close. Okay, so what are you feeling now if you bought that 76.50 as the 2-to-1 entry? You're probably also not feeling all too happy. So if this closes here, you're hoping that 76.50 is going to be reached again, and you're just going to take the exit. But in a trading range like this, this is definitely too high to buy. Like I said, I wanted to buy here, but I couldn't because of the risk reward. And I said, like, I'm not willing to buy. Okay. And if this is a bull trap, then the next thing is measure move down yesterday's low. Where are we on the 60-minute chart? Yep, there is something to say for 43.62. Where are we on the 15-minute chart? Testing the highs there. Inside bar 8, that's not good for bears. Okay, it's not good for bulls, it's not good for bears. But if I bought 76.50, I'm not so sure if I still want to hold. So let's see 76.50, if they can get it, and if they are exiting there. If they are exiting there. Bulls need to get back up this bar. Okay, so if they want to reach the 3 close, they need to do a significant effort on this bar, because everybody's going to give up if this second bull reversal attempt is failing. Do the bulls have a good case here? Yes, they have a good case here, because this is actually more at the entry level where I would want to buy. I said 74.75 is a good price for 1-to-1. So we came there once, we bought, and bulls that bought here are holding for that target. Now we're coming here twice, we're setting up a high 2. If this is a much better buy signal here after the inside bar, double bottom with 2, reversal up, then all of a sudden the 43.90.75 is back as a target. Because bears are giving up on anything they've done. 7 should have gone below 2. 8 should have continued below 7 and not be an inside bar. An inside bar in this context is the end of the selling. So I would want to take my shorts and get out. Okay? Because you had 2 chances here of breaking up below 2. You failed. You're coming to an excellent price for the bulls to buy. Holding the 3 close still, so you're scalping back to the 3 close, and then you have the 43.90.75 right above it. But it's a high one after 1, 2, 3, 4, 5 bear bars. So this is again maybe too high to buy. And remember, the scalpers that bought for the 3 close, they bought 76.50. 81 would be 1 R for them. 85.50 would be 2 R for them. They haven't even reached the 81. So the high one above 8 found sellers. The inside bar 8 found buyers below and sellers above, as typical with a inside bar in the trading range. An inside bar is a trading range in this case, a trading range. So a trading range, buyers below and sellers above, sell high and buy low. And so bulls were buying below the 8 low and bears were selling above the 8 high. We're fighting for the third 15-minute bar close, and then we're coming up to the hour in 60 minutes from now. Nothing's clear yet. We haven't seen the best setup of the day yet. And bears want a good, strong 9 close, so that also on the 15-minute chart, it's starting to become more bearish. But they can't even not get below 2. And they now had 15 minutes the chance to do so, and they didn't. The bulls know that the too low has to hold because it's the double bottom on the 50-minute chart. So if a double bottom fails, everybody will get out. Good follow through bar for the bears on the 50-minute chart, but disappointing that it didn't go below 2. The bears will start to sell high. What is high? Well, high is probably 50% below, between the close of 9 and the high of 4. So 43.81 area they can sell. Still better because it's a small range. What is it? 13 points. You know that the range is going to double, right? It's going to double by going below and get a measured move down, or it's going to double by going above and get a measured move up, or it's going to double by first going below and then going above. We just don't know yet. But there's plenty. There's still 73. What is it? 70 bars until the end of the day. So the right trade is going to set up. A high 2 here would be nice. High 1 being 9 going above 8, and then high 2 would be 10 going above. No, where are we? So would be 11 going above 10, for example. That would be very nice. And for the bears, a break below 2, a pullback, and then a measured move down to yesterday's low and the rollback's low is what they want. Now, selling in here, I would not. It's way too low. We have a gap up. So there is some bullishness in the market. We had 2 strong bull bars. The strongest bull bars on the day were these 2 bars, right? 7 was strong, 8 was pathetic. 5 and 6, if you're a bear, look pathetic as well. So bulls are the strongest today, but they are hesitant to buy up here. They are ready to buy down here. 74 area is a good place for bulls to buy. With a small risk and a large reward. But there's also a time of saying the bulls have to show some stuff because otherwise I lose my bullishness immediately. So this bar or the bar after that should show me some bull strength if you want to keep me on board of your team, right? It takes experience to sort of develop that, where you say, if this is not the bar that we get a breakout, or if this is not going to be a bull bar, then I'm out. Something you hear, I think you hear Rose say that a lot, where they say they have to do it now or the next bar, otherwise I'm out. And so I need to see this bar set up a nice high 2. Is this bar going to be disappointing or not bullish enough? And then the next bar is not going to be bullish enough, then the bears are going to take over and just smash it down. Because enough is enough now, right? The bulls now need to show it. It's good that they listen to me. Nobody's listening to you, Tim. It's just a market. Right. Good bull bar, but it's within a range in a range. So you had a little 4, 5, 6 was a range. Then now 8, 9, 10 is becoming a little bit of a range. So it might be, it's still a good area to buy. Where are we? A 1 R would take us right to the 3 close. A 2 R would take us right to the 90.75, a little bit higher. But then I would not want to see us come down again. So if you say, okay, we should not go below 10, 90.75 is still my target, then actually the 10 close would be my entry point. Bulls now have a nice range to get a breakout. So if they would get a breakout of this whole range, 44.0025 would be their measured move target and probably the 42 low from yesterday. But after these 2 bull bars, they haven't shown us too much. It's a nice point for a good trade, bar 10, bar 8, bar 12. those are sort of the times of the day when in a trading range open, a good trade sets up. I did a study about best trade of the day over multiple years. And in a bull trend from the open, you're usually around bar 4 where you want to buy, because bars 1, 2, and 3 give you some confidence that a trend from the open is setting up. And bar 3 is setting up a 50-minute bar, and then bar 4 is often a pullback bar or something of a pullback that you can then buy above. On trading range days, it's usually around bar 8, 10, and 12, because by then you sort of have found a low 2 and a high 2. You're sort of aware of what the context is. Is it going to be double bottom? Is it going to be a wedge pullback or something like that? And so around bar 8, 10, and 12, strangely enough, it's like an even number. But around this time of day, we should see the best trade of the day set up. Sometimes it's 20 bars, sometimes it's a little bit more, but this to me, the fact that 10 didn't go a tick below 2, and the context here is giving some credit to the bulls for this being a good setup. But it's still a small opening range. In the 91.75 area. So this high would still be one of our targets. But I'm getting a little bit done with the bulls as well for their weak follow through. Like, am I the only one that's going to lift this market up, or are the bulls actually stepping in? Not a disappointing follow through on 11. What is this, 50% pullback? Not even? Okay, that's good. But we should have been here by now, right, at the 3 close. We should have had a good entry bar 11. Low 1 for the bears. Will they sell it? So close to their 9 close. There's probably more buyers, more bulls here than bears. But if the bears can now overpower the bulls by a second disappointment, then they're doing good business. But they have the moving average against them, they have the gap up against them. So it's not so easy for the bears. The probability is easier for the bulls than for the bears. And that's why if the bears need to do it, it's going to take it takes a long time, right? It took them bar 7 and then the disappointment and then the pullback. So nothing is too clear at the moment. Still more bullish than bearish. Encyclopedia, gap up, double bottom. So it could be this scenario where we have a gap up, big pullback to a slightly higher low, and then a trend. It's not this, right? This would be a more violent two-legged pullback after the gap up and then a rally. I don't think that's the right context. This could be a little bit the context. I don't think we're going to get a big rally though. There's so many bears in the market that that's probably not going to happen. Spike in channel, same thing. That's unlikely today. Sell off to a double bottom around the moving average. Well, that's what we're seeing at the moment, but we don't have enough bullishness yet. And then we have the situation of a gap up that turns bearish. So let me see if I can find that. Because let's go back to the price action because we just broke through the low. Immediately, all of my targets are gone, and the bears now want to get breakout measured move down. First to yesterday's close, and then to 43.58. But you can't sell here at this low in a trading range after a gap up. If anything, it's still a two-legged pullback. So nothing's clear. We need to let this 15-minute bar close. and then we can scalp back to the close of the 15-minute. You see, bulls are buying that low, confident that in 1 minute 40 seconds we have a close higher than the 2 low. So they're scaling in all of these ticks. Some algos just buy every tick, and they're confident that the close of this bar is going to be higher than the 2 low. Bulls now want, the bears want to get to yesterday's close. Market's deciding. The bears want to get to yesterday's close. Market's deciding. And then if this is strong, yesterday's low is going to be their target. It's always tricky if there is a gap up and that starts selling off, because by the time it starts selling off, it's too low to sell. It's got this gigantic trading range right now from 43.90 to 43.60. So what if 4 is the high of the day? Where can we go? Well, you typically say at least 30 to 50 points from the high, so 43.35 and 43. Well, if it's 30, it's 55, so that's about yesterday's low. If this is the low of the day and we walk up, then we would still be looking at 4,400 and 4,400 area probably. But the bears closed it to 2 ticks below bar 2. So right now, odds are still that the breakout is, well, it's still not determined. But if 13 is going to be a good close, and we have an opening range where we break up below the opening range, you should get a message. Bears will sell here the 12 close. Bears will also sell higher, confident that we're going to go back to the 12 close. So their stop is now, for example, above 11. So they would sell, for example, the 11 low, confident that we're going to go back to the 12 close. Only scalpers have been making money. High time frame, so we closed the hour on its low. So bear bar closing on its low. It wants to go back to 62. So that is probably not too far away for the bears to be able to reach. It also wants to close that gap. So that would be 65.50. On the 50-minute chart, we now have a 3 legs down, a pullback, and bears are hoping for a close of these gaps. But it's also a 50% pullback from the highs. So now you have 50% pullback from here, you have 50% pullback from here. So chances are way more 50-50 that we're going to go to a new high versus that we're going to go to yesterday's low than what it looks like. So it's still not all that clear. Everybody is scalping. The bears are scalping for a return to the 12 close. Bears are scalping for a return to the 12 close. And the bulls are scalping for a return to the 10 close. Now with 3 bear bars on the 50-minute chart, chances are that even if we reverse up, we're going to come back down, because that will be a second leg. So this would be on the 50-minute chart. One on the 50-minute chart, this is leg 1. Even if it bounces, it's going to come back and get a leg 2 to yesterday's close. So that's why bears are confident of shorting here, because they'll short higher, and it's going to come back to the 12 close in that case. If you look at the 50-minute chart for the past few days, and especially in a trading range, every bear bar or every bull bar that closed, if you scaled in, you could have made money when it came back to those closes. So here on the 50-minute chart, you would just buy a big sell-off, and when it comes back to your entry price, you would exit. Even here, this big bull bar, when it sold off, it came back during this bar and you could exit. That's typical in a trading range where even bears sold this close on the day, on 50 minutes into the day, they had to wait, granted they had to wait a day before price came back to it, but price came back to their entry price and it relieved them. So if you're buying this close, you're confident that price is going to come back to that price. So some bulls will have to scale in for that, and it's going to go back to 43.81. But other bulls are just hanging in there, confident that we'll get back to the 3 close. These bears have done the same. So bears selling here the 43.62, the 43.59. They're confident that if they sell more, that at least they're going to be out break even. That's already what they did. Okay, so they sold that close, they sold that close. They're out break even right now. Some bears are even confident that we're just going to come back to them, and that they're going to make all of the money that they that they're going to make all of the money selling higher and breaking even on that first entry. Okay, this is now turning into a confirmed breakout. 2 closes below 2 sets up that chance that we're going to go to 43.58, but certainly to yesterday's close. So high chance of hitting yesterday's close. Good chance of hitting yesterday's low. But where are we selling? We're selling at very low in the trading range. Okay, we're selling at very low in the trading range. And I think we're going to bounce and then come back to the 12 close. The bounce and then come back to the 12 close. Our first target is now a breakout below 10 and 11. So 65.25. Upside is limited, I think, to about here. This is the break-even point for the bulls. And I think we're going to come back, whatever we do, we're going to come back to the 12 close. And I think we're going lower even, but I wouldn't be surprised if we come here or here. That would be an excellent place to sell. Because if you're selling the 12 close, that is a sell on the 60-minute chart. It's also a sell on the 50-minute chart. So sell the close rally, sell the close sell-off. And so bears are selling this close. What is it? 71, 75? Yeah. They'll happily sell more higher and then get out at the 12 close. So I don't think there is anything too bullish right here, except for the 15-minute bulls that are trying to get break even. So there's a chance that they can get break even. There's another chance that they get the measured move down and they have to buy more to get break even. Right now, it's looking like 43.58 is going to be reached, and bulls will have to buy there. But if we get a bull spike to this level, then the bulls are on break even, but the bears will happily sell there, getting back to the 12 close. So it's good to be a bear right now, because you're not stuck. You might have to sell more, but the 12 close was a good place to sell. And the bears realized it during 13 that the breakout was confirmed. So price had to come back up to now come back down. And so now it looks like we're going to yesterday's close. 64.75. It's super slow, full of traps, full of uncertainty. But look at the higher time frame. That is super bearish. 3 bear bars already, so whatever happens, even if there's a bull bar, it's going to come back to the close of that 3rd bear bar. Let's look a little bit at here if there are any targets from the days before. Yes, there is one. There is the daily high from November 2nd. That daily high is at 43.37. And that is a gap on the daily chart because that gap is still open. So let's look at the daily chart. You can see that there's a gap here to 43.37. There's a close yesterday of 65.25 that we might want to get back to. We dropped below 64.25, so we want to get back to 64. We dropped below this 58.25. Yeah, so we want to get back to 58. So yes, there are some bear targets below, but at the same time, this is the weekly chart. The weekly chart is closed the week before at 43.76. Bulls will make sure that we're going to close 43.76 or higher today, okay? Because they want at least a one tick bull bar follow through and not a bear bar. So 43.76 is actually a magnet today that we should be taking into account here. Doesn't matter so much in the early stages, but towards the last hour of the day, bulls will definitely want to get back there. Bulls doing what they can to close this bar above the 2 low, but still failing. And if they fail, we have 2 bars also on higher time frame below the double bottom, increases the chances that we're going to go to 43.58. But 20 seconds left, and they failed. But look at this bar. Is that a follow through? I can pull it up here. Is this a follow through on a successful big breakout, or is it the early indications of a failed breakout? It's probably a failed breakout. This not strong enough. This not strong enough. So I think bears are getting ready to exit very quickly because this is disappointing. So if bears are exiting, what do bulls do? They start buying. What is their context? Well, last week's close is where there's also a gap, the 11 low. They need a break even, so they want to get to 79 and 10 close. They want to hold the gap open to yesterday's close. But what is this? This is a high one. Are you buying a high one? No, because we just said don't buy a high one in the trading range. Can you call it a high two? Yes. So you can't say this is like 1, this is like 2. We're now ready to buy. And some bears will just hang on to the 12 close, and then even when it goes higher, they will try to exit at the 12 close. If I were short, I would be very disappointed with 15, and I would be very disappointed with this. And so I'd get out of shorts. Now, can you get out of shorts if you're in a good swing? Yes, but if the swing then continues, you have to get back in, right? So either here you rely on your short and you stay in, or you get out because this is a bullish signal, and you get in when the bear trend resumes, thinking, oh darn, I shouldn't have exited. I should still stay short, and now I'm missing the rest of the trend. So exiting shorts is good if you sort of promise yourself to get back in if you have to. Bulls are taking it. So what are bulls want? Well, bulls want 6,000, of course, but bulls want especially the close of 10. Some bulls bought that one. Some bulls will buy more. They'll get out break even. The last week's close, the 11 low, is what bulls want. And bears will sell higher to get back to the 12 close. This is the 12 close. Now, what is the best point for bears to sell back to the 12 close? 76. Or just the close of this bar. When it closes, some bears will try and sell with a limit order at the close of that bar to get back to the 12 close. I think most bears already exited when they saw the 15 close. You know, oh, this breakout is failing, we're going to come back. And if you look back at a lot of these reversals, they actually happen at 5-minute bars that are also 15-minute bars. That's why I'm always looking at the 15-minute chart. And we're almost at the 10 close. I would scalp out definitely a part here. I would scalp out definitely a part here. If we can get to the 10th close, I'm holding, because the bears are selling here for the 12th close. And so this is how scalping works. You get a great bull bar, bears are like, discount to sell. You get a big bear bar, bulls are, discount to buy, okay? So put your mind upside down. When you have a big bull bar, it's time to take profits or scalp out, because this is going to return back to the 12th close. 12th close was 71.75. Oh, don't pass that. 71.75. Can we get a third leg down? Of course. But right now, it is a gap up, and it's a two-legged pullback, and it wants to continue up. Bears see the leg from yesterday and the gap, or the gap and 2 and 3 as a two-legged pullback from a short. So they are claiming that they want a third leg down. What would a third leg down look like? Well, let's take measurements here. So this was the size of leg 1. This was the size of leg 2. They're quite the same. So A, B, C, D. If the third leg down would start here, the third leg down would actually bring us to yesterday's close. So there you go. Big tail on top of 16. Disappointing for bulls. They didn't get the 10 close. They got the 11 low. And so some bulls will know 11 low is probably where I needed to take profit. So if we go to the 11 low again, some bulls that forgot to take profits will now take profit, and then we can sell off. Other bulls are still trying to get to the 10 close, but I think it's good to take profits here. It's your second chance to take profits at the right level. So bulls know, hey, we didn't hit the 10 close, it was just the 11 low. And so on the second attempt, bulls that now understand where to take profit, take profit. Is that going to be it? And can we not go to the 10 close? We can still go to the 10 close, but I think if I would see this, I would have two potential targets for bulls. And if I see that they hit the one and not the other, I might just take that one instead. Remember, it's a trading range. Everything is disappointing. So if you can get a couple of points, 2 or 3 points, and you got 4 in this case, that's a good profit here. Remember, the range is 18 points in total today. And so if you can get 4 points, that's a quarter of the range almost, right? 4.5 points, quarter of the range. You're doing pretty good already if one trade is a quarter of the total day's range. Because that means 4 trades and you have the total day's range as your profit. So the range will get bigger, but at this moment, that is the score. At this moment, one scalp is a quarter of the whole daily range. That's a good profit. But 10 close is better. So it depends on how you play this. I'm flat. I would love to see a breakout above 11, but I don't think we're going to get that. I think bears are going to scalp this back to the 12th close. I think bears are going to scalp this back to the 12th close. or at least the 12 high in that case, but probably the 12 close. Let's see, we've got a good group of questions. I've been neglecting you guys because I'm trying to focus, but some questions. Can you guide us how to set up Globex, and also when and why do we use Globex data? Well, you use Globex mostly at the start of the trading day, because the price action right next to the open, you can use that for measuring and measured moves. It's okay not to use any of Globex price action, but I suggest that you at least want to know where the Globex high and low is, because often if a price target is like, let's say 43.84, but Globex high is 43.86, you can just squeeze out 2 more points because you're thinking that we're at least going to go to Globex high and low. So how do you set it up? Well, you just look at the overnight price action. So I have, where do I still have the chart? I used to have it. So I just look at the 50 minutes because I'm not interested in the 5-minute ETH. I'm interested in the 50 minutes because the movements on the ETH are so small that it's easier to just look at 50 minutes than at 5 minutes. So that's what I look at. So I see that we had this little wedge, this wedge climax, and then we had a double bottom that didn't trigger or that disappointed a lot of bulls. And so that's the information I then use. Are we around the middle of the week, open of the week, and the middle of yesterday? Would this be the apex of a triangle? Well, that's a lot of questions in one, but yes, the close of last week is here, 43.76. I think that is important. Look at the weekly chart from last week. It was a huge bull bar. The bulls want that there's follow through. They wanted a 50-point bull bar follow through, which they didn't get. So at the minimum, they would want follow through that is bullish. The open of the week was 77.50, and so they would want to close that it is at 77.50 or higher to show the minimum amount of bullish strength. This is already disappointing for the bulls, but it is, a 1-tick bull bar would be the minimum amount of follow through that they want. So that is the battle today. The battle is around yesterday's, last week's close and this week's open. Why do you use 61 high and not 60 high for the measured move? Because this is the lower high on this as well. So you see here the lower measured move up is always from a low of a range to a bear bar up. And in this case, I'm using this bear bar, 74.75. So I'm using this to 91.75. And we should still be, no, I'm not sure if we're able to get there. I'm sorry, how do you get the 1 hour EMA on your chart? Well, that depends a little bit by platform. You can put a exponential moving average of 220 on your chart. That's almost the same. In NinjaTrader, you have a cool function where you can actually put the 60-minute chart on your chart and then make it transparent. So you actually have, I have it as line on close, but I have it hidden, so transparent, so it's not showing. But because it's on my chart, I can then add the the EMA, the exponential moving average, on the 60-minute chart on my chart. So this is a NinjaTrader thing. On different platforms, it works in different ways. Al has a programmable indicator for the 60-minute exponential moving average for TradeStation. And then there's Trade08 and whatever type of platform experts that can help you with that as well. But exponential moving average 220 should get you to the same. It doesn't matter for the 60-minute moving average if it's a tick or so off or a point or so off, because it's a 60 minutes, right? You can easily overshoot that by 5 points or by 3 points. It is much more relevant to know where it's at approximately. So here, for example, on Wednesday we touched it and then we reversed up, It's always going to overshoot it by a point or two, three. It's more of a range. So if you have it approximately the same, no, that's good enough. Is there a way to see other people's questions? No, that is a right that only the host has. But I'm repeating the questions, so other people's questions should come up. And if you're in the Discord, then you can, of course, see other people's questions. The Globex low is just the extended trading hours low? Yes. Bull's doing a good job here to get to the 10 close. Next station for them is the break-even point. Yeah, well, it's the 10 close. I don't understand this question. Someone's saying, when is this close to yesterday's close? Bar 14, don't we almost have to get to yesterday's close? No, it's actually a gap that bulls will want to buy. This was a good area for bulls to buy. This is an even better area for bulls to buy. So if I bought around 74, 75, I said, then you can buy lower and get back to 74, 75 area. Bulls are doing what they can to create a gap here. So they just see gap up, follow through, two-legged pullback, and now trend resumption up. Bears see this gap, and then the 2-3 as a two-legged pullback from a bear leg, and then they went 3 legs down. So market will show what is the right thing. Bar 61 yesterday and today's bear 11 did the same thing. 61, big bull bar disappointment, leg 1, low 1, low 2, and you say today's bar 11 did the same thing. Yeah, I mean 10 is, you can call 10 a bull trap. I call 10 a get out break even bar. So you buy here, you bought 76.50 or you bought 79, I said 79. And so you buy more trying to get out. All right, the bulls are going for the bar 3 close, but it's already hesitating. I definitely don't want to hold too long here because it's the second leg up. That 17 inside bar is the start of the second leg. It's a pullback, and so resumption is the second leg. Bears are selling at the 11 high, confident that we're going to come back to the 17 high, and at least for a couple of points, right? So bears are selling above things, selling above 11, selling above 4, even selling above 13, and bulls are buying below things, so buying below 1, buying below 7, and then buying below 12, 13, and they're buying above 15. Can 15 prove to be the trade of the day? It could be. We could now go up to 92 and 4,400. But I think we're going to hover more around the closes of, around the open of the week and getting a little bit more bullish. But the open of the week is a magnet, has been a magnet all day, right? So 2, 3, 4, 5, 6, 7, 8, 9, 10 bars have been circling around the open of the week. It could be that we now say goodbye to the open of the week and just continue up, but this is not looking strong. It's already the second leg. So a third leg could take us maybe to the 3 close, but probably between the 3 low and the 3 high is where we're gonna end up. So around 81. Mind you, I said this was the break-even point. Okay, so if you bought the 50-minute low and the 50-minute close, this was your break-even point, and that's where we are. Now, what do the bulls want? The bulls, well, Now they want a, what is it, 60, so this is 69.25, so that's here. They want at least 86.50, high of the day. Now, is the range small enough for a breakout measured move up? I think the range is too big for a breakout measured move up. It wouldn't be impossible because it confluences with Wednesday's high. We went above Wednesday's high once, so we want to go above Wednesday's high twice. It's not impossible, but it's quite far in this context. But I like the breakout now above 11, and so I'm looking to see if we can at least get that, right? And then a breakout above the range would be a breakout above the hourly bar, and that would then be 44.05.25. So bear stepping aside, bull stepping in. We're back at the 3 close. Are the bulls going to take it and nothing more? Or are they actually going to break out and we're going to get a pullback and then resumption up? I think this is way too strong to start climbing into shorts. But with some micro channel, 6 bars, it's very bullish. There's potential for a measured move up to 44.05. So you do not want to short in here. This is a strong breakout and it's going now to at least 43.93.25. And if it continues, 44.05, and Wednesday's high, 44.05. No, Wednesday's high is here, 44.018. So if this is our entry and this is our stop, then that is the entry point. And then 83.75 would be our entry point. It's waiting for a pullback. So if this traps you out, it's waiting for a pullback for 43 high from yesterday and then the high of Wednesday. You can take a small position and add on to not miss the trend, but it's probably going to pull back a little bit, close to the 1 high. But it's a strong breakout at the moment. This is a micro channel on the 5-minute chart, which means it's a big breakout on the 50-minute chart, which means it's an impressive bar on the 60-minute chart. Let's see that, right? We're going to that 91.50 target still, and now even more. So now, on this chart, I can draw a measured move, 67.75, 82.50, 97.25 becomes our target on this chart. Now, this is still 50 minutes out, so it's not a confirmed breakout yet. It's looking good. On this chart, we're going above it, so 86.50. Even if we pull back, we would still come back to 86.50 most likely. So if we now come back to 43.80, 43.82, 43.84, we would still climb back to, again, going above 4. And the same counts for 5.5 minutes from now when this bar closes. Even if it closes higher than this or lower than this, we would be coming back to that close. So if you find a suitable risk reward, maybe below 18, and let's say this closes here, I would be happy to buy around this level, knowing that we're probably going to go back up. Right? That chance is higher in this scenario than that we're actually going to hit the stop. Okay, good breakout above the high of the day. If you can get another bull bar, then 44.05 is likely as a target. Took a little while to provide some clarity, but bar 19 gave us that clarity, right? Two-legged pullback, and so we should now be getting at least, if we see this as the first leg here, then this should around be the trajectory. Pull back somewhere to here, testing the 11 low, continuation up, 91.50 probably the 45 close from yesterday, and then grinding our way up to 44.05. Or lower, but at least higher than now. What are the chances of today becoming an inside bar? So inside bar not going below yesterday's low, not going above yesterday's high. Well, if you look at the daily chart, what you see is that when there is an inside bar, that's typically because the day before it was exceptionally large. So if you take this bear bar here, the bar behind it was an inside bar, the bar before it were inside bars. If you take, well, where do I see another inside bar? Here, this was indeed spectacularly small and disappointing that it became an inside bar. Where there are more examples? You'll typically find it when a bar is exceptionally large before it, where the day behind it is an inside bar, and particularly at climaxes. So this was a huge bar. There were multiple bars inside of it. The next bar was not an inside bar, but there were some bars inside of it. It typically happens, it could happen in such a scenario where a bar like this is exceptionally large, and so the bar behind it stays an inside bar. So today is definitely a candidate, but it should be bigger than what it's now. So it should have at least the size of Wednesday, Tuesday, and Monday, where Tuesday was about 35 points, and Wednesday was about same 30 points or so. So we should get at least a 30-point range. That brings us to 4,400, right? And the 42 low and probably the 43 high. Now, this day is going to be a little bit more normal, than we're probably going to see the Wednesday high that would be so close to the Thursday high that we might actually go above it. Because this breakout is getting stronger and stronger above the high of the day, that it increases the probability that we're going to see at least 44.0525. Now, strong trends overshoot measured moves and then pull back to where the original measured move was. So overshoot would be only 5 points, so it's a scalp overshoot to go above yesterday's high. So the chance is there, but a measured move up is to almost yesterday's high, so the chance is actually that we go above yesterday's high. Yeah, looking exceptionally good, right? Is this a successful breakout or not? Like, how much more do you need for a successful breakout? Now, on the 15-minute chart, the stop is below 16, and the target is 525. So some bulls will just buy with a limit order 87.25 or 87, and then ride it up to 525. On the 5-minute chart, the stop is still below 18. So some 5-minute bulls will want to buy no higher than 89.75, 89.50. And so in both cases, for the 5 and the 15-minute chart, we have to come back a little. So 21 is probably going to be a pullback situation. We're also now at the close of the bar 45, and we're at the original measured move that I mentioned at the open, the 91.75. So that measured move that we had from this whole range, that's where we are now. So we might go a little bit more higher, but we're going to pull back before hitting 44.05. It's definitely by the close, yes. It's a micro channel, bear bars, bull bars. This was a strong breakout above that high. So the minimum measured move that I mentioned was where we are now, 93.25. But we could see profit taking here or just below it, coming back down and then crushing 93.25 and going back up. Now, if we count, I was going to say, if we count 30 points, so 30 points would be about the minimum range, then you come to this level as well. We should be taking out the 42 low. And this is strong enough to make me believe that we're going to get to 44.05. But this is climactic, so better to now wait for a nice pullback. The pullback could be small, right, to the levels that I mentioned. It could also be bigger. But it's safe to buy at a close that corresponds with this 50-minute close. So if you buy 91.25 and lower, you can be pretty confident that something strong as this will come back to the 21 close, right? Bulls will want to buy more, trying to get break even on their first buy and make a profits on their second buys. Now, I think if I mention that we're probably going to pull back, that is in no way, shape, or form a incentive to go short, right? You can't short against a micro channel that looks like this, but it's more of a way to say maybe you can get a high two, maybe you can get a limit order at a little lower price, but I would never sell against these strong bull bars. What I would love to see is that we touch 87.13 or 87.25 or 87, and that we then reverse back up so that we go straight to 44.05. And for the 5-minute bulls, I would want to see 89.25. 22 prompted the buy the close bulls to exit. So you buy the close, buy the close, buy the close, until you find a bar that's disappointing, and then you exit at the close of the last one. So 91.25 is where the buy the close bulls exited. No bear is selling here. 22 is a profit-taking bar. We're going to hesitate around the next breakout point. And bulls are deciding, are we going to go straight to 44.05, or are we going to drop the price a little, buy more at a better price, and then go to 44.05? I had the encyclopedia open, but I closed it. Let me open it again. Markets deciding to pull back a little bit first. Bulls can't push through, so gonna go down a little bit to find more bulls, but nothing to short. But you can see the disappointment creeping in. 10 minutes of going sideways at this previous lower high, higher low, sorry, at this previous higher low. So there are some bears scalping there. Well, they're going to scalp without me. This is so strong that we're just searching for the point to pull back to, probably here, the low of 21, to find more buyers. The pullback could go maybe all the way for 50% pullback to 83 level, but this was so strong, I think bulls are eager to buy at a good price where they can get risk reward to 44.05. 4,400 is a magnet that is pulling us back, which is the gap from yesterday and the high of the initial sell-off. That will be a magnet to come back to. The first part of the pullback reached. So 89.25 is a point where if you believe in the 44.05, you put your stop, and 89.25 is a 1-to-1 to 525. The 8725 is a 1-to-1 to 45 or 575 on the 15-minute chart. So if we're only pulling back to this level and then resuming, I'm counting on us to go even faster to the 4405. But we're not even pulling back in that case to give the 15-minute bulls a chance to enter, and I think that's what we need. So we're gonna, in my view, pull back to at least the 21 low. But if this now raises up with another big bull bar, then the high one is definitely then what you want. I was trying to find this one. So breakout mode on the open, I think that is what we had. A little bit up, a little bit down. We went down further, but then huge breakout and resumption. And in this case, not a measured move, but not far off from a measured move, if you ask me. At least some measured moves. In this case, you had a measured move from the low here to the high here and then up. So we should get some form of a measured move. And indeed, if you look at how far up this went, what are the chances of this coming all the way down to 4370, 4376? Very, very small. Okay. So this is setting up a high one. There's probably buyers, bulls above 24. We might get a small second leg down and then pull back further, or we might go up immediately from here. Or we might not even trigger that leg. But this is going to go to maybe maximum the 21 low. It's going to go higher. Okay. At least 80% chance that we're going to go higher. 90% chance that this is going to remain the low of the day. And also very high chance of coming back to these 21 close. So if we start to sell off 21 close, the second hour is a very big bull bar. The second hour closed at the 24 close, because the first hour closes 12 bars, the second hour closes 24 bars in. And so if you think about it, the second hour that just closed, its low was here, its open was here, and its close is here. So it's a huge bull bar. Well, what are the chances that that bull bar is not going to go above the high of that bull bar? That's very, very small. What is 1R on the hourly bar? Well, 1R on the hourly bar is to 44.1350, right? Which is above yesterday's high, which is above Wednesday's high, which is above 44.05. So the bulls on the hourly chart will definitely want to get there. If we start to sell off to 18 high, to the 11 high, bulls will buy more there, right? So a 50% pullback on the hourly chart on that hourly bar will be to 43.79. They'll easily buy with a limit order there, confident that we're going to go back to the 24 close. This is such a big bull bar that a 50% pullback will get back to the close of that bull bar. Same here on the 15-minute chart, which closed here on 21. If we start to sell off, bulls will buy, confident that we're at least going to go back to the 21 high. And with that big bull bar on the 60-minute chart, confident that we're also going to get a new high of the day higher than 22. You can see that big bull bar here. It's pulling back to the breakout point. So 86.50 was the breakout point on this breakout. And it wants to go to at least fill that gap at 43.96, and then it wants to go to the high 44.0550. So on the 60-minute chart, that 44.0550 is actually a target. Bulls want to get there to take out the stop of the bears. Increases the chances of us reaching 44.05. Is this a reversal? Is this a bear leg? Is this a trading range? And is this a low two? No, this is way too strong on all types of time frames to warrant a second leg up. This is finding, after this big breakout, it's finding an entry price for the bulls. The bulls want to buy closer to a 1-to-1, which is this line, and they want to buy closer to the moving average for a better risk reward. Now the 15-minute bulls just got their entry price. So if we actually can reverse up from here straight to the 44.05. If we go lower, then chances of a measured move are decreasing, but chances of getting back to the 21 close to the 24 close are still as high as they are. Now I use a mirror chart as well. So the mirror chart is the chart upside down. You've heard me talk about it a lot. So strong breakout, 2 legs, but 1 leg on a higher time frame. So what are the chances of this not getting a second leg down? Second leg down from the moving average takes us to about here. Even a second leg all the way to, even if we come back to all the way to 71.25, chances are still higher that we're going to get a second leg down on this chart. So second leg down on this chart is second leg up on our chart. No, I think it's a test of someone saying, are we closing the gap to the 4 high? No, I think it's actually a test of the 4 high. This could be all that we're getting. So I said 21 low is going to be the target for the pullback. If this is the pullback, and this is all we're going to get, then things look very good for that region. And this is how magnets work. So you get this huge bull bar, and then as soon as you are at the magnets, the 45 close, I mentioned it a couple of times, then the market just dies. It just goes flatline. Okay, so you have this. This is a vacuum. There's nothing to sell in this because bears know, well, the first place where I want to sell is the high of the day and then this. Now, if you sell the high of the day and you sell the 45 close, you're easily out break even, right? On 24. But bears are not selling in this area. So that's why bulls can just go and pierce right through and then find hardly any resistance there. I think this will probably be too low. $93.25 is the target. What would the entry be for that? $83.25. Best thing we can get is a high 2, close to the moving average, at around a 50% pullback. That would be an ideal setup. Somebody said I scalped out very quickly at the 11 high. I think that was a good decision. I think bar 19 was a improbable event. So there was a high chance that we would form a double top at 11 and try to go back lower. The bullishness comes from the gap up and the test here of the close and then the reversal up. But I think a bar 19 is a surprise. And that's why we got so fast continuation. So if you like the fact that you were long and that you scalped out at the 11 high, I think that was a reasonable decision, especially if you bought above 15, because you can see that that was 2 times your risk, more than 2 times your risk. So it absolutely is sensible to say that, you know, if you took profits at the 11 high, I think I'm not going to hold that against you. Let's say it like that. Yeah. All right, we found bulls. Can we now break above the high of the day and move up to 4,400, 4,475, and bar 43 high from yesterday? That is the bull's intention. But what will the bar look like that we have to buy? And can we buy a high 1? Or should we buy a high 2? Choices, choices. I think we should come back to at least the 21 close. And this doesn't look like a high 1 that I would want to buy, right? The tail on top, everything there. So 4,400 above for obvious option expiration, 76 below for obvious open of the week. But after such a big bull bar the week before. Makes more sense that we get some type of bull bar. The high of last week, 43.91, is a much better candidate to close above. We've been testing it yesterday, we've been testing it today. We're testing all of these weekly levels today. It's not a surprise on a Friday that we're testing open of the week, that we're testing the close of last week, that we're testing the high of last week. We could get a sudden breakout to the upside to just leave that behind, and then the verdict has been made. It's going to be bull follow through on the weekly chart. But there's also the weekly option expiration, so that might be around 4,400. 4,400 is a magnet by default. We're waiting for a second leg based on this. Okay. So first target for the bulls is the 21 close. 21 close, 91.25. 43, 91.25. Somebody's asking a question on high 1, high 2. Can you tell me what you don't understand about it? Then I'll go into it. We touched at 91.25. That was an easy one. It's a scalp. Oop. So the high 1 in this context is above 26. Okay, so you're in a bull trend. It's a raging bull trend, and you're getting a pullback. The first time that we break above a bar in the pullback is a high 1. So it's the high of the first time. If we now get continuation, so we get a second leg down to a double bottom or to a lower low, and reverse up from there, it's a high 2. So where was the high 2 today? Well, if you see this leg as one leg, then this was the high 1 above 10, and then you get another leg down, and this is the high 2 above 15. But it's a high 2 from this, let me paint it. It's a high 1 from this bull breakout. So you have a bull breakout, pullback 1, pullback 2, and then a reversal up. Okay, so then you're getting this type of pattern. So you have a bull trend, you get the first leg of a pullback that sets up the high 1. That fails, that sets up a second reversal. That second reversal is by definition a high 2. The second time we go above a high in a pullback. If you get a third one, then your pullback was a wedge. If your pullback is a wedge, the next leg up would be the final leg of the trend, because a wedge by default breaks a bull trend line, sets up a major trend reversal. Now this is looking good on the way up to 44.05. I liked where the bulls were buying on the 50-minute chart. I like the breakout. I like the confirmation of the breakout. I like the trend resumption. So I just wanted to go now higher than the 21 close. I want them to get higher than just the equal closes on the 15-minute chart, but it looks strong for 4400, 4405. And so where do we see good examples of? It's easy to say high 1, high 2, but yesterday you had here the same. So you had a raging bull trend here, 1, 2, 3, 4 big bull bars. It starts to pull back. You have a high 1 here, so that bar is the entry point for the high 1. So we go above a pullback bar. Then you get a new low, but you're still within the context of this bull breakout. So the second time we go above it on that bar, that is the signal bar, that is the trigger, is the high 2. You can also say, well, I think this is the whole pullback, and this is the high 1, another pullback, and this is the high 2. Okay, that might be the case as well. Fine. Whatever you do, by here or by here, it's ultimately the same thing. This was the better one, I think. we had so much trading waves price action, it's always better to see them in a trend. So let me see. So here you have, again, bull trend reversing up. We have our first target, so we have a measured move with this range. So I think we're going to get there. So when you see this, bam, 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 it's a micro channel up. This is a pullback. This bar is the pullback. Because it's a bear bar, so it's by default a pullback. And so this is the reversal back up, but it's the first one. So you're buying a higher one in this case. Okay. This one, same thing. So you get a pullback. The first time that we go above the pullback, it's a high one. Even this is a high one. Like the pullback is deeper, but it's a high one. And then you can consider this actually a high two. Now, granted, the second leg of the pullback didn't go below the first leg of the pullback, but it's still a leg one, leg two. The high two needs to be at a worse price than the high one in that case. If you're buying it here because you're taking the second entry. So you can call this a new high one. You can call this a high two. Doesn't really matter. The goal is to get in on a pullback. Now, in this case, there was a high one and it triggered and it got the bulls out at the 21 close, which was a nice scalp. And the bulls now continue. I think we have to go a little bit lower. I don't like this pattern setting up on the 15-minute chart. So you can hold or you can get out and then just buy if it goes above 22 for continuation. 26 was a good entry bar, so I would not want to see it go below 26. But we need stronger follow through than this. All right, we got 10 minutes left. And so, any questions or comments before we wrap up for the week? Oh, let me actually check if there is someone willing, daring enough to come in behind me. No. So I'm shutting the door after my session for the week. So keep rolling in those questions. Let me find the questions box here. Do you enter against where masses have their stop? Yes. Where would the stop for the bears be in this bear leg? Wouldn't you agree that it would be above 11? So if you're looking for a long, then buying above 11 or a measured move up is definitely what you want. You're going to get that 93.25. The stop would be below 2, so some bears would have sold below 2 for a measured move down. But once they saw bar 15, they knew that the breakout was failing. The context was bullish already. So I said when 15 formed, I said, this is where the bears are going to say goodbye to their shorts. And hopefully wear pants, right? Yeah, if a high 2 fails, a high 3 is a wedge. I was asking this question that I have to come up with a quick example. 1, 2, 3. Not really. So here you have a wedge. So 3 pushes down. So you have a bull trend. And the low is here. You got a high 1 here. So there's a high. Oh, what do I do now? This one. So you have a high 1 there. But that fails. You have a high 2 there, and that fails. And now you have a high 3 there, and that ultimately succeeds. So what does a high 3 mean? It means that you had 3 legs against you. What does 3 legs against you mean? That you had a wedge. So 1, 2, 3 pushes, micro wedge here as well, but in general, just 3 big pushes before the bull trend continued. Also in the lower third, so it's a trading range context. Which means that at the new high, you're going to get some selling. But a wedge typically means that the trend is not as strong as it used to be. Like 1, like 2, maybe like 3. In this case, you got a doubling of the range because it was more a horizontal flag. Here, super nice. What a nice example. Here, 3 legs. That's not really pullback. No, it's not a nice example. No. Gotta give it to you later. All right, bulls. Everybody knows where we're going, so just do it. What's disappointing about this bull trend at the moment? That it takes already 7, 8 bars to get a new high of the day, or a new high in the trend. Like the trend stopped at 22, we're now at 29, and we still have not reached a higher high. What does that mean? Well, it means that 5-minute bulls have not been able to raise their stop because their lower high is still below 18. They want to raise their stop to below 26, but in order to do that, they need a new high, because only at the new high, this is a higher low. Right now, it's not a higher low yet. Right now, 18 or 17 is the higher low. And so for bulls to increase their position, they need price to go above 22. What I like is that 26 is the entry point for the 50-minute chart. And so it strengthens my point that we're going into that range. But the first 15-minute bar was a bull bar after that entry point. But the continuation is so small, right? It's almost going sideways. And if it's going sideways, it might still get a measured move up to 4,400. But if it goes sideways, it might also become a final flag, a little breakout, and then go down to 77.50, which is the open of the week. So we're deciding continuation of 4,400 or continuation or breakout measure move down to 43.76 area. It's still more likely to go further up to 4,400, but the longer this goes sideways, the quicker we run out of juice and the more bulls will exit and the more bears will enter. So I'm not really bothered by this now 7, 8 bars, but if it goes to 10, 15, 20, this is where I will say goodbye to my longs as well. Our bears trying to please explain. Well, it's only high ones at the moment, so where's high one? Well, 27 was an entry bar, high one above 26. 28 is another pullback. So we just triggered a high one above the other, above the next pullback. You can also still be in an extended leg 1, leg 2, and then that will be a high 2. We're at a high 1 on the 50-minute chart. Someone's asking, what is your percentage risk on a trade? I think I should answer that question more in general terms than in personal terms, because first of all, it doesn't matter. My feeling and interpretation of risk might be different than your interpretation and feeling of risk. Also in absolute values, like if we both have a 401k that's well filled, and we both have a house that's paid off, and we both have plenty of stuff on the side, 16 rental properties and whatever, then a trading account of 100k and putting 5k to risk is a different feeling than having almost nothing, a trading account of 100k is then all I have, and then putting 5% risk on the table. So even if I would answer the question, it would not mean anything, because risk is relative to you and your position. So everyone will receive risk on a personal basis. And $100 on the poker table or $100 on the blackjack table for me is going to be feeling different than $100 on the blackjack table for you. Because for you it might be small, and for me it might be large. And so you can only answer that in general terms, but risk will always be subjective to the individual. In general, you would want to build in, let's say you're already consistently profitable, right? There is always a chance that you're going to have 10 trades in a row that don't work out, 20 trades in a row that don't work out, 25 trades in a row that don't work out. And so you need to account for the unthinkable, because the unthinkable is going to happen somewhere in your trading career. And so the typical risk should account for that. Now there's benchmarks and there's things around 1%, 2%, whatever. But I think that should be more relative to the total amount of assets that you have. So if you have a trading account, but you can easily replenish the trading account, you can take a higher risk, right? Because that for you blowing up means just like I have to replenish the account. So there's nothing to say about that, but the only thing you can really say about that is that you should not feel bad about 3, 4, 5 losses in a row, okay? Because that's going to happen. Statistically, that's 100% going to happen, 5 losses in a row. And so 5 losses in a row should mentally not cloud your judgment about the 6th trade in a row. And once you feel that after X losses, you feel different about the next trade, you have taken probably on too much risk on the previous ones to matter and care about the next one. And so you should put yourself in a position where you can happily lose and happily trade and hold on to targets. But if you're so big in your trade right now that you can't bear this to not wait until it hits 4,400 and 4,405, then you're probably in it too big. Because traders at this moment should hold on to longs and see what comes out of this trade. And if you can't bear that, and you can't bear now a 10 points pullback, you're in it too big. But risk is subjective to the individual, and that is, I think, the most important thing. If you were looking for an entry on the 1522 bull leg, what would you do? I would buy the close, preferably the 18 close. And the 19 close as well. Pretty sure that we're coming back to the 19 close. The 19 close was such a strong breakout above 11 that at a minimum we would get a measured move. The range 15 low to 11 high. Such a strong breakout, but it's good to then buy the 19 close and keep space to buy more if it pulls back immediately. But then when you see the 20 close, you can buy the 19 close, and what you would want it to buy extra at a pullback is now what you're going to buy extra at a 20 close, right? Because your probability has increased. You want to buy in 2 parts, so you want to buy 19 close and lower. Instead, you're going to end up buying the 19 close and the 20 close, the 20 close. That's fine. Because your probability increased dramatically at the 20 close versus the 19 close. All right, so time to continue to 4,400 and the 42 low. So 42 low is first. Nice little flag here. So our measured move is going to be 4,475. Whereas the stop on the 5, the stop on the 5 is below 29. So their entry point, 93.50. So it could be that this bar closes, that we go to 93.50 and then up. I mean, if you were flat right now and looking for an entry to the 4405 measured move, I already said that would be at the 26 low. Because the 26 low is 1-to-1 for folks that have their stop at the low of the day. So that is a perfect, nice, it's high probability setups you can take 1-to-1. Low probability setups you want to take 2-to-1. But this is high probability. It's a strong breakout, high probability of going higher into 4405. And so this would be the lowest I would want to buy. Or just the high one, right, above the 26. And then you can choose to put your stop below the low of the day, below 17, or below 26. Now, if you put it below 26, you can buy heavily, like you can buy big size because your risk is only 3 points, which means that there is a probability of a second leg down type of pullback, and you might get stopped out. But you're now already at 2 times actual risk. If you bought heavily and you put your stop low, now you're already at 2R. While if you bought smaller, put your stop below 15, you can get 1 time risk reward. You buy smaller, your profit is going to be bigger, and so you choose your own risk reward type of trade. And so if you want to buy here, I do the same. I would want to see a measured move from this range to 44.0075. I would want to put my stop below 29. So I would want to buy 94.25 after this bar closes, because I need this bar to close to confirm the breakout. What will you do on the weekend? I can't answer that. That's strictly confidential. We're actually traveling this weekend, so. I think those were the questions that I had here on the on this one. I think those were the questions that we had on the trading room. No one behind me. Everybody's making money. Keeping in your longs there. So, a couple of scenarios for the remaining part. So definitely gonna see the 4400, testing the 4400, 4405. We might even go above yesterday's high. But we gotta keep an eye on the 76, 78 level in the final hour of the day. So right now this is strong enough. Can this get a second leg up to 44.10.75 in yesterday's high? Maybe, but above yesterday's high, there will be bears selling yesterday's high. So can the final hour become so drastic that we're going to go all the way back to 43.76, 78, and 43.80, open of the day, close of the day? I don't think so, but definitely if we reach yesterday's high, there will be bears selling, and we most likely are going to close the day lower than yesterday's high. So would not be amazed that we're going to come up to 44.10, 44.15. I think 44.05 extension of this as a breakout is very likely at this point. But like yesterday, you only need one bar to completely erase my premise here. But right now it's looking very good. So that is what I expect. I expect maybe at yesterday's high, but bears are showing up there, and they will get this to back into the range of yesterday's high, and probably going to be a little disappointing for the bulls to follow through on the weekly chart. All right, that is all I had time for today, and I will wrap up. I will have my weekend next, and I will meet with you lot at next week Friday. So that Friday service, weekend service next week as well. Till then, everybody, take care. Wishing you all the good things that there are, good trades. Take care of yourself, and chat with you guys next week. Thank you, everyone. Goodbye.